Charles Schwab manages $2.83 trillion in client assets, and the firm's chief strategist is cozily ensconced there. Ann Sonders, closely followed by Wall Street, joining us in a Fox Business exclusive. I'm sure you're hunkering down too, right?
Absolutely.
All right, let's get to the landscape people need to see before they start making big bets. And everybody wants this tax reform. When does Charles Schwab really see it happening?
So the latest from our group in D.C., who follows this a bit more closely on a day-to-day basis than I do, think that, Mnuchin's comment about August being the date could be accurate, except that that would probably just represent the House bill. Then you've got to get a Senate bill together. Then you've got to get a conference agreement on a common bill, none of which can happen until we have a little bit more resolution on the Affordable Care Act repeal and replace. So we think best case scenario is in the latter part of the year, which limits the ability for it to be retroactive to the beginning of 2017. And the other rub is some had hoped that we may be able to see the corporate piece of this front-end loaded. In other words, that they would split the corporate and the individual side, but that looks a bit less likely. And I think the difficulty of getting the individual side down, how much more complicated that is, also probably pushes it a little bit down. So this is probably, in terms of impact on the economy and earnings, probably more of a 2018 story.
I think you're right, because we're seeing so much battling when it comes to the Affordable Care Act being switched over. So this could push it forward, actually push it out. What sectors would benefit once we do get the tax reform, and then which ones would be hurt if we don't get them?
So, it's hard to say because we don't have all the details yet. The assumption is that there would be some sort of repatriation component to the corporate side of the tax bill. And the biggest beneficiary there is the technology sector. That's a sector on which we have an overweight recommendation. However, our recommendations at the sector level have really nothing to do with tax reform. We're not trying to sort of game that looking ahead into the latter part of the year. Our sector recommendations are for fundamental reasons. But if you look in terms of the corporate tax rate coming down, the sectors that pay the highest rate and therefore would be the biggest beneficiaries would be utilities, would be staples, would be basic materials, and then would also be the financials. Of those, financials, we have an overweight rating, but again, that's exclusive of any opinion we have on tax reform.
Yeah, and in the end, we're going to put up all of Ann's sectors that she feels will be helped and hurt if it doesn't go through. Ann, great to see you. Thank you so much for being with us.
Thanks, Liz.